All right. Let's go into what's going on in China because we have a lot to say.
There's so much happening in China right now. This is almost going to be like a mini deep dive.
This is really crazy. I mean, we're going to keep doing the Chinese economic updates probably every month, every other week, because this is insane.
Yeah. I am of the opinion, I texted Anthony about this earlier this week, we are in the midst of watching an economic collapse in China right now.
Yeah, I agree with you.
Right now. So why are we saying this? There's a bunch of reasons. First of all, new data came out about declining imports and exports that now has gone through July.
We talked about this last month too.
Mm-hmm.
So we wanted to see, is it a continued trend? Are they going to bounce back? Well,
yeah, both imports and exports went down further than what we saw in the month of June. Exports dropped 14.5% in July year over year. Imports fell 12.3%. Both were more than exports expected. We're seeing a spiral.
We're seeing a spiral. We're seeing a tumble right now. The snowball is getting bigger and bigger as it's going down the hill. Mm-hmm. That's what's happening. The problem's getting worse and worse. One of the ways you can see this so much is imports falling alongside exports. China does a lot of manufacturing, and they need to import a lot of the things that they then build up, okay? Mm-hmm. China is not importing enough stuff to increase their exports anymore, and the world is turning against them, specifically the United States. On August 9th, the Biden administration passed an executive order that is now screening outbound investment. It's banning investment from of quantum computing, AI, and advanced chips from getting into China completely.
Yeah.
51% of American imports from low-cost Asian countries came from China last year, down from 66% when Trump was president.
Yeah, the decoupling is very much happening. And the investment trends have been going down long before this executive order was released. A large part of that is because of the crackdown that Xi Jinping has initiated against specifically tech companies, but really almost any American company, like big American companies that are operating in China, with the aim to increase the strength of the grip of the CCP on its industries. Mm-hmm. The problem is China has relied heavily on this external investment over the entire course of its 40-year rise.
They have been built on foreign direct investment.
Yeah, and now it just doesn't have the capacity internally. It doesn't have the capital to keep innovating and producing. And so because of that, I think we really are seeing a spiral where these countries are going to keep trying to remove investment from China as they continue to be scared that Xi is going to crack down too much. They're not going to want to have operations. They're going to shift manufacturing capacity to similar cost countries like Vietnam, like Thailand,
like Mexico.
And I don't know how to get out of it.
I don't know how to get out of it either. I never thought that we'd be in a situation where I would say this, but it is now clear to me China needs America more than America needs China.
Yeah.
I was under the impression that we needed China more. I was wrong. China needs us way more because they need us as a buyer.
Yes.
What is the evidence that they need us as a buyer? They are not only going through a decline in their exports and a decline in their imports, they're going through a deflationary spiral right now. And we've heard a lot about inflation in the United States. Why is inflation bad? Inflation is bad because it limits your buying power. Well, deflation is really bad because it stops the encouragement of consuming. Mm-hmm. When you think that your dollars might be worth more later on, you're going to want to save your dollars. Mm-hmm. Your dollar isn't losing value, it's gaining value over time. It doesn't encourage consumption. And that's not helping the Chinese economy that's sitting on a bunch of products that it's used to exporting to the United States, but now there's no buyers on the international market.
Yeah. And you can think about this from the money supply, right? There are no buyers on the international market, so money isn't coming in that way. And it's the same way as far as labor, right? Mm-hmm. If the external investment isn't coming in to produce in China, then it means there's just less money in the economy. Less money in the economy means that prices have to go down.
Yes.
Something that's tangentially related to this that I was interested is the real estate crisis.
Oh, yeah.
Which we've...
Oh, wait, before we move on to the real estate crisis, I want to say one more thing about the falling CPI, okay? So one of the reasons that it's getting so bad in China with this deflationary spiral is interest rates haven't fallen at the same rate as the CPI. The Chinese government is not responding by cutting interest rates where they should right now. So real interest rates are currently above the CPI. What does this mean? In economic terms, a positive real interest rate encourages saving and investment as rewards individuals and businesses for deferring consumption and putting money to work in productive activities. It can also influence consumer behavior by making it relatively more attractive to save rather than spend, which can have an impact on economic growth and monetary policy decisions, and that's exactly what we see happening now.
Yeah, I think the interesting thing is they're kind of caught between a rock and a hard place, because if they lower rates, then they're probably going to be taking on more debt.
Yes.
Right? Because borrowing money is going to be cheaper, and they already have a huge debt problem. So again, it's like, where do they go with this? I don't know what kind of government policies they do to get out of this. So the reason I want to bring up the real estate crisis, it really reminded me of our conversation about healthcare last week.
Okay.
Because just like healthcare is an enormous percentage of America's GDP, real estate is the same thing for China. So China's real estate industry is 30% of their GDP, where it's like 20 to 25% usually in other rich countries. A couple years ago, Evergrande, which is the second biggest property developer in China, defaulted. It meant the loss of a ton of confidence in their real estate industry. Investment went down a ton. Something very similar is about to happen with its biggest real estate developer, which is Country Garden. It missed debt payments last month, prompting fears of a default, and these debt payments were relatively small. So for them to miss them really shows how bad of a situation they're in. And because of the reason this kind of connects to deflation is with the uncertainty in the real estate sector, the prices of building materials dropped 7% last month.
Oh, man.
So with this decreased confidence in real estate, which is 30% of the GDP, and in some other industries like high tech, right, where there's less investment coming in, where there's already the semiconductor war happening, there's less demand for these expensive materials, expensive services, and if there's less demand, then prices have to go down, and that contributes to deflation as well. Some of the property sector's problems are structural, and we've talked about this as well, that China has plummeting birth rates. It also has an extremely high youth unemployment rate. So that also influences young people to be less likely to get married. So there's this confluence of factors, which means that fewer young people are being put into a position to even buy new homes. And since the economy is weakening, those young people are probably going to continue to face high unemployment. And again, it's like, where are you going to go?
I mean, and it's getting so bad, the Chinese have said that they are now officially no longer going to be reporting their Chinese youth unemployment numbers.
Yeah.
They're not, those numbers, we're not going to see them anymore. Because it's getting so bad that if that's the telltale sign right there.
Yeah. This is the last point that I had pretty much. There's a campaign by the Chinese government really kind of across the board to become more opaque about the economy, to project fewer financial woes than there actually are. There are reports that they've been instructing lawyers in IPO reports, not to paint that bad of a picture of the Chinese economy, so investors will be more willing to invest in those companies. And that they've been telling economists to avoid discussing negative trends or use softer language in talking about the economy at large, because they don't want to spook the people.
And I think the Chinese economy, what they need is a massive stimulus package.
Yeah.
Because if you're going through a deflationary spiral, you need to put more money into that economy right now so the people have stuff to spend. They feel like there's money to burn, and they burn it because they honestly need to spark inflation.
Yeah.
They need to spark growth like that. They need to pass a stimulus package.
Yeah. And know why they haven't. I think it still is the fear of the debt.
Yeah.
Right? Because she, over the last 2-3 years, has really focused in on that as a huge problem for the economy, is that all these companies have been borrowing willy-nilly, and the real estate sector, again, is a huge part of this, because specifically what happened there is these companies kind of built up a Ponzi scheme almost, where they would start one project because people in China have been paying up front for apartments that they haven't even lived in.
You would like pay a developer to develop the building so you could buy it at some other point in the future. I'm gonna put this on the floor.
Yeah, good call.
It's a total mess, and then eventually those apartment buildings weren't even built.
Yeah,
that these people invested in.
They would use the money that they got to start new projects, and then they just never follow through. And so now they're at this point where there are a ton of unfinished projects, and they have their money has run out, so they can't actually buy. Even though the building costs are coming down, they can't buy the materials to build them. And she looked at this and cracked down on those developers and was like, no, you guys are doing the wrong thing. You should be building these apartments that you promised people. And that exact policy is what means that they can't do it. Now, then again, I think if he allowed them to keep borrowing at the rates that they were, then they probably would just keep doing the wrong thing.
Yeah.
I don't know.
I think like an issue with the Chinese welfare state, which I think we should do a deep dive in at some point, because the Chinese welfare state is very interesting compared to the United States welfare state, but it's very regional. It's operated on a very regional basis, state by state in the Chinese government. It's not a very centralized welfare state. Like in the US, we have the social security system. China doesn't really have an equivalent to that. It doesn't really happen. That makes it, I think, hard for the Chinese administration to get stimulus checks out to people and get stimulus packages out to every citizen. It makes it difficult for those reasons. Trying to do a national unemployment policy would be actually kind of difficult in China because of the welfare systems being unique to different states. And the states having different funding mechanisms for all these different programs. That's kind of similar to the States, but it's just different the way that our policy is organized and directed. So I think that there's a lot of issue with even trying to get a good demand-driven stimulus package out of the Chinese economy.
It's so complicated. Yeah, they're in so deep right now. I just think we see continued collapse. The demographics aren't there. The internal demand isn't there. I don't see them getting out of this.
I got to tell you, because I'm a nerd who reads The Economist, right? So this was the cover of this week's Economist. Costly and dangerous, why Biden's China strategy isn't working. And they make the argument that the process of nearshoring and decoupling from China is backfiring. I don't agree with them, but I want to at least give those arguments because they are going on in the conversation around this moment we're in with the Chinese economy. So the issue that The Economist is outlining is that trade with China and America is going down, yes, but trade with China and America's allies is rising at the moment. And this is indicating, one, possibly that American allies are now becoming packaging hubs for Chinese goods. That's argument number one. And then the second argument is that more countries are receiving Chinese investment that are American allies. One example of this is Mexico. Chinese companies have exported $300 million a month in parts to Mexico and in car parts to Mexico, and that is more than twice the amount they managed 5 years ago. Another example that The Economist gave was that China used to provide 3% of automotive parts to Eastern Europe. This is being Czech Republic, Hungary, Poland, Slovakia, Slovenia, Romania. But now China is providing 10% of automotive parts, a 7% gain in 5 years. What does this mean? The Economist is arguing that when a push comes to shove, perhaps these American allies would actually choose China over America if the Chinese and the American allies' economies become so intertwined. If Mexico is now getting all of their input materials from China, what is the incentive to stick with America? Now, my rebuttal to that is America is Mexico's demand. So Mexico has to decide, is it going to side with their supplier or their buyer? We are their buyer. China is their supplier. Who are they going to side with? Now, I think that America has an opportunity to also become Mexico's supplier, but that's hard.
Well, I think the key here is for America to build out its allied sphere enough to cover every part of the supply chain. Like,
So
have
maybe
alternatives to
America,
China in that supply chain.
so maybe America doesn't have to give Mexico the inputs, but maybe a Philippines could give Mexico the inputs.
That's it.
That's the answer.
Yeah.
That's the answer.
I think
Because
so.
the reason we're saying America can't provide the inputs is because when an economy modernizes and grows and becomes more service oriented, we have more high value added tasks in the production of things.
Mhm.
So we develop software, we develop internet and intellectual property. We develop.
We do analysis.
We do analysis, right? We do these high value added activities where smelting or creating the steel or mining the steel. That's not something, or mining the steel, mining the iron you need. That's not something America's going to be in the business of because that's lower on the value added chain.
Mm-hmm.
A developing country would see that opportunity to take that part of the supply chain and would love that, because to go from subsistence farming to raw material exporting is a huge jump in productivity and value adding. That's going on in Latin America right now. Latin America has seen a boom in their resources, in resources and commodities like that, like lithium, like copper.
Mm-hmm.
And Latin America has a new way out of poverty if they are able to take advantage of these raw materials and get them on the international market. But my point is, America's trouble is to keep not just their economy from being entangled with China, but keep their allied countries not entangled with China.
Yeah, which does mean their hands are really full. And
Yes.
the one thing I'll say that would really throw a wrench in this argument, and that unfortunately, since this isn't our full-time job, I can't speak authoritatively on, is how much of these raw materials are in our allied countries, right? Like, because that's kind of the black and white. Like, if all of the copper is in China, we kind of have to bite the bullet and find an agreement that allows us to do that.
Well, the material we talk about a lot is gallium, right? China is 90-80% of the international supply of gallium.
Mm-hmm.
The United States has a gallium supply, but again, we're not on that side of the value chain.
Yeah, it's a tough economic equation for us, because we really can't, like, as soon as we started up gallium refinery or mining, basically China's just going to infuse a bunch of government funds into their own gallium production and flood the international market with it, so that it's completely not economically viable for us. Those companies that are doing it in the US will be forced to shut down, and then once again China will have complete power over the material and can restrict it whenever they want.
Yes, because we're not playing on the same playing field, because America needs to operate in the profit motive, where the Chinese economy could just funnel subsidies to these companies that they could just not make a profit for a super long time, where America can't do the same.
Yeah.